Good afternoon, ladies and gentlemen. Welcome to the HELIUM Global Limited Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. On today's presentation, the company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. And I'd now like to hand you over to David Minchin, CEO of HELIUM Global Limited. Good afternoon, David.
Good afternoon, and thank you everybody for attending. It said there was 270 people in the room waiting to join this call, and over 500 people who said they would attend, which is a great result for a geologist with a speech impediment. Is a dream come true. But it's good to be able to reach out to so many people at the same time and to have so many people interested in our project. I will switch off my camera now so we can focus on the slides, and I'll just take you through the presentation. For those of you who haven't heard me present before, as I've said, I'm a geologist. I'm a technical guy. This isn't going to be perhaps the same quick, slick presentation you'd get from a pump and dump CEO, but that's not why I'm here. I was here to talk because I was asked to come in because I'm a geologist and I can get things done, and I know how to get things done in Africa. I like to think that over the last 4 months I've delivered quite well, and looking forward to continuing with our delivery over the next six months as we move from exploration into appraisal. Quick disclaimer statement, you can read it quickly if you like, and I'll move on to a background on the project. So as I said, I'm a geologist, and when I look at a project, I look at it from first principles. Technically, is the project outstanding? Is it something which I'm prepared to commit my time and my reputation towards? I can't change what's in the ground, but from what I've seen at the moment, this is a genuine world-class project. It was the unrisked perspective recoverable helium resource of 138 billion cubic feet. It's enough to provide the entire world for more than 20 years, or a meaningful 10 to 15% of global demand for over a century. It's got helium bubbling up to the surface at up to 10.5%. That's between 50 and 200 times higher grade than anything which is currently in production, and it's not associated with hydrocarbons. That means that this helium that we're exploring that we could produce is going to be part of the transition from a carbon economy to a green technology, and that's something which is very interesting for me from a personal point of view, and which I think buys into a lot of people's investment mandates now, as we transition into a zero carbon economy. Being able to break that link to hydrocarbon for the provision of helium, which is a critical element, is essential. So all that adds up to make something which I say is a globally strategic resource. I'll come back to that phrase strategic later and explain what I mean by it and why I think it's a strategic resource. But first of all, I'm going to give a quick background to helium. It's always good. I know we've been in the market for 4 months, but there's new people who've invested in the last few months, and it's always good to recap why we're interested in helium and what helium is for. So I like this chart here on the right hand side, because it sort of explains the diversity of helium usage. From sort of low tech applications on the top left hand side to high tech things like hadron colliders and quantum computers at the bottom right. Now, not everyone has a quantum computer in their desk on their desk yet. However, in many ways, this is the story of helium. It's a high tech commodity that is used in high tech applications that then become tech, that then become normal. Now, if you'd had an MRI scan 20 years ago, you'd be one of very few people in the world having MRI scans. But currently, MRIs account for 20% of helium demand globally, as it's become moved from something very niche in research institutes to being part of a diagnostic toolkits of doctors around the world. If you look at some of our other key growth areas, hard drives. So 10 years ago, the only thing that was kept in the cloud was raindrops. Now, anything that we do, every website that we click on, every purchase that we make, that data is stored somewhere, and that all needs hard drives for it to be stored in. In 2018, Toshiba released their first helium-filled hard drive. It's a third gen of hard drives for the data centers by replacing the air gap between the spinning disks of a hard drive with helium, which is the lowest viscosity and the lowest heat capacity of any gas. You reduce the energy demand of our hard drive for between 20 and 40%. Now, the biggest cost in a data center is energy. And the biggest crisis about the cloud is the carbon footprint of the cloud. So as second generation hard drives are reaching the end of their life, they're being replaced by helium-filled third gen hard drives. And this is going to be a dramatic demand over the next 10 years. We're producing something like 4.2 gigabits of data every year. And that all gets stored, and it will all get stored on helium-filled hard drives. Similarly, fiber optics, essentially in our modern communicative world, there's over 9 billion kilometers of fiber optic in the world, and that's set to increase dramatically in the next 5 to 10 years as high-speed internet is driven out across China, across India, into the remote parts of Europe and North America. Helium is essential in the manufacturing of fiber optics. It has the lowest molecular size of any gas. So if you want to produce something in a clean environment, you need to produce it in a helium environment. Now, any minuscule imperfection in your fiber optic is lost data. And when you're installing hundreds of kilometers of it, you can't afford to lose data over the length of your cable. So it's all manufactured in helium. But helium is an expensive product, but compared to the cost of a substandard fiber optic, which fails QA/QC testing, it's nothing. It's an expensive part of a very expensive process. The same again with semiconducting chips. Now, a few years ago, if you were driving a car with a semiconducting chip in it, it would have been a high-end BMW or a Jaguar. But in 2020. In the second half of 2020, Volkswagen had to delay production in most of its European plants because of a shortage of semiconducting chips. That's going into just normal cars. Now, I can see a future in a few years' time when the semiconducting chip in your fridge, which was produced in helium, is going to send information down the helium-produced fiber optic cable in your street to a helium-filled hard drive in a data center owned by Amazon to tell them you've run out of milk. All of this needs helium, and it's an essential commodity. It's the unsung commodity in the communication age. So what we like about it is a diverse set of end usage. It's a high value set of end usage. It's not tied to any one commodity. It can't be substituted. Where it's being used is because it's essential for the quality of that end product. And the end product is more expensive than the helium gas that goes into it. And as I said, the cost of a helium gas is less than the cost of a substandard end product. It's used in lots of next-gen technologies. It's hard to predict their growth, but the best estimates which we have is 6 billion cubic feet this year, going up to 8.5 billion cubic feet by 2030. Very dramatic growth, fueled by fiber optics, fueled by semiconductors, fueled by the continued growth of MRI scanners as it moves from something being used in the first world to something that's being used around the world. Of course, fueled by various space programs as we go from space exploration into space exploitation. A month ago, SpaceX launched a rocket into space that contained 157 satellites and $12 million worth of helium. The helium purges the unspent fuel out of the tanks and prevents them from exploding. It's essential, particularly if you want to reuse the rockets. And yes, SpaceX is a big buyer of helium. So moving from a 21st century of demand side into a very 20th century supply side. At the moment, 95% of helium is sourced as a byproduct of hydrocarbon production. This production is inflexible, it's inelastic. As new demand comes on stream, it can't just come in with some more hydrocarbon production, principally because the helium is at a very low grade. It's being sourced for between 0.04 and 0.35% helium, very small amount of very major billion-dollar developments. Historically, for the last 10 to 15 years, the swing supplier has been the US Federal Reserve in Texas. That was a strategic stockpile which was built up during the Cold War, and that's been depleted over the last few years. And as of 2019, as of last year, it's closed its door. So last year, between 20 and 25% of global helium supplies come off the market. And that has seen dramatic price increases. Now, helium is a fairly opaque market. It's traded in end-user contracts, which are all have non-disclosure agreements associated with them. What we use as a window into this is Chinese customs data on import pricing. China is the world's largest importer of helium. It imports over 1 billion cubic feet a year and has got no domestic helium inside of China. By aggregating customs data over 3 to 6 month periods, we're able to see price trends on average bulk imports, and we're seeing the price increasing from $225 per MCF in 2017 up to $375 per MCF by the end of 2020, and it's holding there. We're hearing anecdotal reports of end users paying up to $1,500 per MCF, which sort of highlights the need in the industry for a new source of primary helium supply, which can be flexible to new demands, which can provide a reliable supply to end users that's not associated with hydrocarbons. So it reflects helium economics rather than hydrocarbon economics when forecasting production rates. And we feel that we are that new primary helium supply. So I'll talk now about our project, which we've been working on since the last days of 2015. We were able to take first mover advantage back then to secure 100% ownership over 4,500 square kilometers in the most prospective ground in Tanzania, which is probably the most prospective ground in the whole world. We've got 3 project areas: the RUKWA project, which is our flagship at the moment, and Ayasi and Balangida. Ayasi and Balangida are at an earlier stage, but offer very different sealing mechanics. They've got the same high-grade seeps coming up to surface, but the lakes there are ephemeral and they're alkaline, so you get salt beds at the bottom of the lake. So potentially different sealing type and a different trapping type. They're very good projects, but early stage because we've had to focus somewhere. We focused on RUKWA into the most historical data and best logistics. We've got surface concentrations of up to 10.5%, between 50 and 200 times higher grade than anything which is in production at the moment. And we're only about 50 kilometers from the Tanzam Highway, which is the main paved highway connecting Zambia to the port of Dar es Salaam. I've spent several hours driving along it now, and I can tell you it's maintained a very high standard. Tanzania is the 4th largest gold producer in Africa. It's an established natural resources jurisdiction with several multinational resource companies operating in the country. As of March of this year, they have a new president, President Hassan, who is very pro business, and actually in her inauguration address cited helium as one of the sectors of the economy which she wanted to support in its growth, which is great news for us. Helium's classed as an industrial mineral under the Mining Act, so it's subject to a 3% royalty and a 16% government free carried interest. Those rates were implemented in 2018, so that they're not going to change anytime soon. We've been there for 5 years. We've got very good relationships in the country with all levels of government. In fact, I spent the first 3 months of this year in Tanzania, meeting with various ministries, meeting with people in Dodoma, Dar es Salaam, meeting with people out in the field. And the levels of support which I've got from everyone has been incredible. All of our licenses were renewed in September 2020, so we've got at least 5 years left on our exploration licenses, but we're hoping to convert to mining licenses some point in 2022 once our economics studies and our ESIAs are advanced enough. Speaking of ESIA, we have a very sustainable company. We work closely with the communities in which our project is housed, and that's something which is not just a box-ticking exercise for us. It's something which I'm very proud of, and which is going to contribute greatly to the success of our project. Don't forget, we've got a 100-year life of mine. The children who are educated in the primary schools that we're sponsoring now are going to grow up to be our engineers, managers in the future. This is a long-term commitment to a sustainable community in one of the most remote parts of the country, and I'm very proud to be associated with that. As mentioned previously, we're also zero carbon. Currently, to secure 1,000 litres of helium, which is enough to fill one MRI scanner, you've got to produce and burn 2.5 million litres of hydrocarbon, and that is not sustainable. We all have different opinions about the green economy and how long it's going to take us to transition to a zero carbon world. My personal belief is that it's going to happen a lot faster than people think, and there will be stranded assets in this world. And a few of those stranded assets are going to be those large, low-grade helium hydrocarbon projects. We are a primary helium company. We are part of that transition to a green economy because we are able to produce helium without producing hydrocarbon, in fact, without producing any CO2, and we will produce zero carbon helium. And how we're able to do that, it's because the geology of our project is unique. Now, as I said at the start, I'm a geologist and I assess things from the ground up, actually from the underground up. And what we're seeing here in Tanzania is something which is very, very specific to the basins which we've pegged. So helium forms over hundreds of millions of years through the natural breakdown of radioactive isotopes in ancient continental crust. And it gets released when that crust is broken open for the very, very first time. But it needs a heat source to release it, which means you need to be close to a volcanic center or the helium doesn't get released. However, if you're too close to a volcanic center, then the helium gets swamped by carbon dioxide venting out of the magma chambers, and it doesn't form an economic accumulation. So you need to be in a specific Goldilocks zone away from a volcanic center to get high purity helium nitrogen gas released out of mantle, out of continental crust, sorry. That then needs to be trapped in the systems which are the same reservoir seal trap structures as you would find in a conventional gas project. So when we did our analysis of Tanzania back in 2015, we did a top-down view and we identified everywhere where seeps were coming up to surface with high-grade helium and associated nitrogen. And then we pegged all of the areas where that was adjacent to a sedimentary basin, which has got the potential and the capacity to trap and store helium in economic concentrations. We've got all of the ground in Tanzania, which is prospective for this. Because of the geometry of the East African Rift and where we're sat on the western limb of the East African Rift, there's not many areas where you will find that Goldilocks zone, that distance away from a volcanic center, associated with lake bed sediments with capacity to trap. If there is anything like this, it's not going to be discovered for another 20 years, by which point we'll have been in production for 18 years and we'll have already cornered the market. So yarby shucks and yarby shucks to you, it's too late. Our lead project is the RUKWA project. This is about 3,500 square kilometers. It's our lead project because of the wealth of historic data which is associated with this. It was explored for hydrocarbon in the 1980s. If we didn't find any hydrocarbon, it's not mature for oil and gas, which is great news for us because we don't have that low value pollutant in our system to deal with. But what they did do is they left a legacy of 2 stratigraphic boreholes and 1,000 line kilometers of 2D seismic. We've got the data from the boreholes. We were able to get hold of the original data tapes from the 2D seismic, which we were able to reprocess with algorithms that weren't available in the 1980s. And we've produced very high resolution cross-sectional images of potential trapping structures. We've augmented that with high resolution Falcon gravity gradiometry flown across the entire basin. That gives us a lovely top-down view of the basement contact and gives us an idea how the traps we're seeing in 2 dimensions project out in a plan view as well. We've done macro seep analysis to properly characterize the gas as it comes out of the ground. We've done micro seep analysis to identify anomalous helium in soil, and we've identified that across the basin, importantly not limited to 2-dimensional linear shapes, which would suggest it's migrating only along faults, but over potential trap structures, adjacent to potential trap structures, is indicating that the helium is being generated and is migrating across the entire basin. With that, we've put everything together and developed a best estimate unrisked prospective recoverable helium resource of 138 billion cubic feet. I'd like to point out to you the names who did this resource. It's NSAI and SRK. This isn't a think of a number type of resource. This is backed up by proper science and engineering. Another few things to point out about this P50 of 138 billion cubic feet. Now, I'd said when we listed, I said that's got an in situ value of $38 billion. Actually, now we know what the imported price into China is $375 per MCF. Actually, the in situ value of that gas is closer to $50 billion. The other thing to know about it is that P50 means that it's a probabilistic analysis. So P50 means there's a 50% chance that there'll be less. There's a 50% chance that there'll be more. Because we haven't done any drilling yet, we've got quite a broad spread on our probabilistic range, and our P10 is 520 billion cubic feet. That means there's a lot of exploration upside left on the table, and if we did have 520 billion cubic feet, that's over $200 billion worth of gas in the ground. Another thing to point out about this P50 is it was calculated on a helium grade of 4.2%. That's because based on an arithmetic mean of all the helium seeps that we'd measured to date. Now, since that resource was calculated, we've done a regression analysis plotting oxygen against helium to work out how many of our samples have got air dilution. And when you do that, you can clearly see a trend that says be coming up to between 8 and 10% in the ground. So as soon as we take our first sampler out of the ground, we could double the size of our global resource. The question is, why do we need to? I mean, we've already got the equivalent of a 20 trillion cubic feet natural gas deposit in a conventional onshore system. If this was hydrocarbon, it'd be a no-brainer, but it's not. And we've actually got several advantages over hydrocarbon, which is that our barriers to entry are much lower. The capital cost of this project is a fraction of the capital cost of an equivalent sized hydrocarbon project. It's a very high value gas, so you don't need to build a long pipeline to the coast. You liquefy it at site and you truck it. We're looking at sending one truck a day. We're only 50 kilometers away from the Tanzam Highway, which is a paved highway going all the way from our site to the port of Dar es Salaam. We can load onto container ships leading the port and be out in the market to China, Japan, Europe It's a very simple logistical route for an African mega project. It's the capital cost for production of 350,000 MCF a year is about $50 million. Now that's based on a top level engineering study using a theoretical gas composition that comes out of the ground. If you include some production wells, perhaps some infrastructure to tie the wellheads together at surface, improvements for that first 50 kilometers of road to get to the Tanzam Highway, we're looking at maybe 70 to 80 million dollars. The Northfield expansion, which the Qataris are building, is going to produce 400,000 MCF a year of helium, and that's looking at a production CAPEX of $28.5 billion. So yeah, $80 million is a lot of money, but it's a drop in the ocean compared to some of these mega projects out there, and it's a drop in the ocean compared to our payback period. You know, that's 350,000 MCF at $375 an MCF. You know, you're selling $130 million worth of gas every year, even after the government free carry royalties, corporate taxes, operating costs. Your margins are extravagant, and your payback time is less than 12 months. With a 12-month payback time. So the other thing to know is that this production is modular. You know, each of these, it comes in a set of a dozen shipping containers, footprint of less than 1,000 cubic meters. You make it off-site in America or Germany. It gets shipped in, bolted together in site. Once we've paid off the capital cost of our first module, we'll be in a very good position to self-finance our second module and bring ourselves up to 700,000 MCF a year. The market needs it. We're then in a position to review and potentially add a third production module. Then we'll be producing 1 billion cubic feet a year. We've got 10 to 15% of the global market, and we're the swing suppliers. We're the people who've paid off our capital cost, and we can play around a bit. We can increase production, drop the price of helium, look for latent demand in the market. But we can reduce our production and increase the price of helium, and take more of a margin. And 1 billion cubic feet a year, we can keep on doing that for over 100 years. And that's why on the first slide I say this is the potential to become globally strategic. Because in a success case, we've got the capacity to be the price setter in this high-tech, high-value commodity for over 100 years. And that's the sort of thing which is quite difficult to ignore. With all that said, what we've got to do now is find the damn stuff. So to do that, we are mobilizing our drill rigs, and we're going to be turning them beginning early June. So in a month's time, we will have spudded. We're using slim hole technology, using a mineral drilling rig. We're targeting traps down to a maximum depth of about 1,200 meters. The reason why we're doing that is that the smallest mineral rig is considerably, the largest mineral rig is considerably cheaper than even the smallest hydrocarbon rig. So for the cost of one oil and gas well, we're able to do 3 helium wells, and I hate wasting money. Rigs are already mobilized. The equipment is being collected at a forward yard in Beira. It's about 100 kilometers away from our site. It's on the Tanzam Highway, and we've got a secure yard there, so it's a sensible place to collect things when we're transporting goods from all over the world. The camp is established, and I believe it's going to be livable from next week onwards. It's got space for 50 workers and specialists. My tent is going to be the one on the front right-hand side there. For a drilling contractor, we're using Mitchell Drilling. They're very supportive of the project, so much so that they've agreed to take the 3rd hole payment and have an option to take the 4th hole payment in equity. So they're very confident that this is going to go ahead and going to be very successful. The other thing they've done is they provided us with a much larger rig. The rig you see there in the photograph in the center, that's the rig that we're actually using. It's higher capacity than the one which we had originally contracted, which gives us a lot more pull during exploration, which means that if we get in trouble, we're in bad ground, we're still likely to reach our total depth. But importantly, it's able to stay on site for the appraisal well drilling. And that triggered in April a very successful capital raise for us, as we realised that if we could contract everybody to stay on site, then we could shave 4 to 6 months of our timeline, as well as $500,000 in mob and demob fees. It's that time saving which is critical. I think it's all about maintaining momentum in this market, and I think investors agreed. The financing was substantially oversubscribed. We went out for £10 million and had to scale people back from a total book of over 22 million, which again reinforces the conviction that people and institutions and drillers and service providers have in this project. Based on our own conviction on the project, we extended our infill seismic campaign. We commenced acquisition in March, and very quickly became apparent that we were getting very high resolution data back. It was answering a lot of our questions, and we decided on identifying new priority targets, which we wanted to properly evaluate. So we added another 50 kilometers to make sure we properly evaluated everything which we'd identified. The guys have been out there for the last six weeks. Pleased to report that we've completed the entire program with 0 lost time injuries, and with very good community relations, which, considering we've been driving about all over a 310 square kilometer area of interest, and at times even running seismic lines through the middle of villages, maintaining that close working relationship with the community is key. The data has been very high quality. It's allowed an improved interpretation of trapping styles across the basin, and it's thrown out some interesting new priorities. We've identified multiple traps, but one of the new an impact, so a demonstration of the impact of this improved modern seismic data has been the identification of the tie structure. Now, tie is situated in the northwestern edge of our area of interest. Historically, it was very poorly defined by a single line and a quite low resolution. It was just a noisy, dirty part of the line, but we thought there might be something there, so we included a few lines over it just to see. What the results showed us was that the trap was much larger and more robust than we had previously been interpreted. It's got a very nice 3-way dip closure over concurrent with a gravity high, and that's over an area of between 2 kilometers wide, maybe 2 to 3 kilometers wide, and 5 kilometers long. We'll have a look now at some of the actual seismic data, so you can see what I mean. Now, straight away, what jumps out at me is the quality of this and the resolution of it. You can easily see the seismic characteristics of the different stratigraphic packages which we have. You can see the structures very clearly. I should point out there's a great deal of vertical exaggeration on these, which makes interpretation easier. You can also see some really subtle features, areas of bright reflectance, areas which are in the red sandstone, which might be bentonite beds even. So I'm sure I didn't need to put this interpretation on because you'll all have seen it straight away, but I'm helping out here. You can clearly see on the dip line, which is the one running southwest to northeast. You can see this lovely horsed structure. Great place for trapping gas. It's popped up from the surrounding areas. As you know, gas rises as it flows, so it's going to start accumulating there. And on the strike line, you're seeing this beautiful rollover. There's a lovely domed structure, perfect spots for accumulating gas. I've highlighted the potential stacked areas of interest here, at the base of the lake beds and in the Karoo. There could be gas all the way throughout this structure, because we've got nice repeating reservoir seal structures, especially throughout the Karoo. We've got light areas in the red sandstones, which could potentially be bentonite beds, and then up into the lake beds and even into shallow sediments. There's potential for good trapping structure, for good reservoir seal couplets to form. So it's that stacked horizons which has really helped us to prioritize TIE, because it allows us to test multiple horizons in a single borehole, which is then going to help us to assist in our targeting elsewhere, where the trapping structures might not necessarily be vertically one on top of each other. And that's why it's been elevated to be the first one. It's only one of a portfolio of shallow trap structures, but this high resolution, high quality, modern 2D seismic data has helped to find. So moving on, by moving to TIE, it has slightly delayed our mobilisation timeline, as we're having to construct roads to an area in the northeast of our drilling area, rather than Kasuka, which was much closer to the camp and the main road. However, it gives us a juicier target on our first well, and I'd rather take a 2-week delay and get a better hit. So we're commencing well 1 in June. Each well takes about a month to complete. While we're drilling, we're using a weighted mud, which is going to a mud recycling unit. That's got something called a possum belly hat on top of it, which collects gases as it comes out of the mud. We're feeding that into multispectral gas analysis, so we can record helium readings from mud cuttings in real time. If we get an area of elevated helium, which will be a certain level above background level, then we'll be able to report that to the market as a helium show. Helium show is great. It means there is helium in the system. It's a quantitative indication. So yeah, it's a qualitative indication that helium is there. It's not a quantitative analysis of it, but it shows that the system is working and helium is being generated and stored and trapped. I'll be raising a glass to that. What we would then do on completion of a hole is we'd run down a wireline suite. So the standard set, density, spectral gamma, and something called an NMR tool, which is going to identify porosity and hopefully identify if the pore space is filled with water or gas. Now this, the NMR tool is designed for hydrocarbon and helium nitrogen mix, absorbs neutrons in a different way than hydrocarbon does. So you're having to adjust the tool and adjust our mindset to try to read this. But if we're able to identify reservoirs with a seal above them, and that's adjacent to a helium show, then we have what's called a helium discovery, and that's the boy. What we're then going to try to do, though, is to flow the well. This isn't going to be a flow test, because the results of it's only a 10 centimeter diameter hole, and we can't clean a hole that narrow. So any flow rates you get aren't going to be meaningful. But what we want to do is to try to secure a sample of that gas, and that's because when I was talking about the resource earlier, that's based on a 4.2% of helium. if we get anything above 4.2%, that we can start imagining that our global resource is going to increase significantly, because a discovery in one well helps to de-risk the entire basin. So we're going to try to flow it. We're using what's called a packer test, which is basically an inflatable balloon. You put one down underneath the area of entry area you want to test, one above. The one above is a little valve. It takes a pipe to surface. You inflate those. You reduce the pressure in the area that you're testing. Crap comes flowing in. Mud comes flowing in because we haven't been able to clean the hole, and then hopefully gas comes flowing out the top. And yeah, that's when we'll be passing around the cup and speaking in squeaky voices, because that's going to be a good day for all of us. But there's 3 types of discovery here. There's the helium gas show, the helium, which is the gas in mud. There's a helium discovery, which is reservoir identified in wireline. And then there's the flow, which is when we get our sample. It's an aggressive program. We're moving directly from exploration into appraisal, from appraisal directly into 3D seismic, and 3D seismic directly into engineering. We're going to hopefully make these discoveries by the end of summer. We appraise them in September, October, November. Leaves next year to allow us to focus on engineering, economic modeling, ASIA studies, and permitting. I want to get this permitted in 2022 so that we can start construction in 2023 and be producing our first helium by the end of 2023 or stroke early 24. There's a need for a new helium project. We will be able to fill that need, and we'll be able to fill that need in a strategic way, which is going to supply this high value commodity for the next century. It's an aggressive line, but we're the right team to be doing it. I'm not going to talk about everyone, but Ian Stalker is our chairman. He's a persistent African entrepreneur. He's put over 700 million into natural resource projects across Africa. Knows the continent very well, and has been a very successful businessman and a deal maker in his time. Myself, I'm a geologist. Again, previously director of geology with AMED Funds, a private equity group responsible for investing 450 million into African exploration. I've worked in a range of commodities and a range of jurisdictions, and I've got a good feel for how to get things done. I'm going to also point out James Smith, who's our technical non-executive director. He was formerly VP of exploration at RUKWA when they were doing the Songo gas project, which is onshore gas in Tanzania. So a lot of directly transferable skills and contacts, and a really valuable addition to the board. And that's more or less it. I titled the summary slide as a transformational opportunity, and that's because, in my honest opinion, that's what this is. It's transformational, not just for the communities in which we're working, where we're going to be able to offer multi-generational opportunities in education and employment. It's transformational for the helium sector, which is going to get a new long-term supply of zero carbon helium. But importantly, it's transformational for us as a company and for you all as shareholders. In the next 6 months, we're going to move from being an exploration company with some great ideas to being a development company who has the tiger by the tail and is holding on to the largest natural primary helium company project in the world, something which is globally strategic, and something which can change the way that this precious commodity fuels the communication age into the 21st century and beyond. I'll open the floor for questions.
David, thank you very much indeed for such a comprehensive presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Just while David takes a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you will be redirected for the opportunity to provide your feedback in order the company can better understand your views and expectations. David, perhaps before we move into some of the Q&A from today's session, we did receive a number of pre-submitted questions, and I think a lot of the areas we have covered off in the presentation itself, but perhaps I could just start the session off with these, if that's okay. Mm-hmm. The first one reads, can you give an idea of what you'll be looking for as you drill each of the wells and what will make them a success or a failure?
I answered that one in part during the presentation with regards to helium shows, about then leading into, so the show being the gas coming out with the mud as we drill, and then that then being that being a very qualitative analysis, which is then refined by the wireline data, which should show reservoir and seal, and give us some confidence of the horizons to then test to try to flow. I mean, any indication of helium is a success. We've got a large portfolio of targets. Each hole that we're drilling tests a slightly different trapping style. The success of one, even if we can't flow the gas to surface for whatever reason, it shows that the system is working, that helium is being generated and helium is being trapped, and that aids our knowledge for the next hole that we drill and the hole that we drill after that. So anything which we learn is a positive in sort of understanding the basin and understanding the system as a whole, and in de-risking the entire play.
That's great. Again, another question really around drilling, and you have covered some of these points off. What are the biggest risks to drilling? How does the drilling work? Again, we've talked about that slightly, but how do you ensure you don't lose helium, probably even more importantly?
Yeah, I mean, the biggest risk is probably in the seal. If you look at the component parts of the helium system, we know we've got source, and we know we've got migration, because we've got helium flowing up to surface. We know we've got reservoir, and we know we've got units which could be sealing, because we've got the two stratigraphic holes. And we know we've got trap, because we've got the historic seismic that's backed up by the infill seismic. With seal, you don't know it's actually working until it's proven to work. And the same with trap. You can look at it on seismic and go, well, this has got all the indications of being a trap, but until you've actually drilled it and tested it, you can't be sure that it's going to work. So, I mean, the biggest risk in the project is in discovery, and that's why we're a 20p share rather than a £1 share, because we've still got that exploration risk, and there's still that upside to be found once we make our discovery. In terms of drilling, we're using a land rig. It's a mineral rig, but we're connecting to it the ancillary parts of an oil and gas rig. So it's on tracks, rolls out into the area where we said we wanted to drill. We built a drill pad for it. Drills down. We're using a weighted mud, because if we hit a gas, we need to control that gas flow. Once we've completed the hole, we're going to cement it. If it's had a helium discovery in it, we'll be using bridge plugs, which seals the hole tight. But it also allows us to re-enter the hole at a later date if we want to take additional measurements or additional samples.
That's great. Thanks, David. Again, probably just on the flip side of that, what happens if one prospect does not work, and what does this mean for the other targets?
Yeah, now, as I said, we're targeting different trapping styles across the basin. So the failure of one target doesn't necessarily mean that the next target is more likely to fail or less likely to fail. It's sort of, the failure of one doesn't mean the failure of all. The success of one increases the chance of there being a success of all. But saying in this place we didn't find helium, it could be because we didn't have it migrating into that area. It could be because that style of trap for your testing isn't working, or that the seal which you thought was complete is broken. So there's lots of reasons a specific prospect can fail, which doesn't devalue the entire basin.
And just, I guess, an extension of that, what's plan B if you don't make a discovery? Obviously, we've just covered off the fact that each well could be, independent as you go through, but what is that plan B?
What a pessimistic set of questions. Plan B, it depends on why the system's not worked. Now, we know that RUKWA is being generated. We know that helium is being generated at RUKWA, and it's got every potential of being trapped there. If it's not being trapped, then we need to spend some time and work out why it's not being trapped, which means a full analysis of the drill data and the seismic data. Perhaps we'd go, okay, well, actually, it's not worked in those areas that we've tested because our interpretation, which we did before we drilled, was wrong, in which case we might go back to RUKWA and have another look at it. Otherwise, we've still got IASI and Balangida. Now, these are very different plays in terms of the reservoir and seal, because they got salt horizons, and salt is crystalline, is probably one of the highest quality sealing rocks which you can have. Though at a lower development stage than RUKWA, we'd have to sort of start again with the seismic and identifying prospects and leads. But if RUKWA as a play wasn't working, and we felt that starting at IASI and Balangida would be the best chance of success, and that's what we would do. So a plan B and a plan C.
Fantastic, but we're going with plan A. David, perhaps I could just point you just to the Q&A tab just on your screen there. Obviously, we've had a number of questions in from investors, and as I say, thank you to all the investors who submitted questions. There are a lot of you, and the company will review all the questions submitted today. But perhaps if I could ask you just to scan through those, just to see if there are any of the pertinent points that you could pick out that just would add a little bit more colour. Obviously, your presentation was very comprehensive, but that'd be kind of you.
When's the first drilling expected to happen? In early June. I reserve the right to be less specific than that, because if there's a dramatic rainstorm, or then it might be hard to get stuff down into the basin. When you've got multiple moving parts like this, there's always lots of scope for something to go wrong. But early June is our target. So next one says, with all the 2D seismic done, is the assessment still estimated to be 138 billion cubic feet, or has it been upgraded? We haven't got as far as completing a new volumetric analysis yet. We're not going to do one before we drill. Sort of seems a bit unnecessary to calculate volumes and to go through that third-party process, which takes time and costs money, when we know that we're going to drill it anyway. So we're not recalculating volumes or risk weightings. The next update to the resource is going to be once we've made a discovery and once we've gone through appraisal, which will then include an update on resource and reserves. We've talked about risks. Just another question about chance of success, but so we're not going to do that. So you mentioned your helium will be hydrocarbon free. Is there an opportunity to increase market pull by color labeling helium-derived gas in the same way as hydrogen is? Well, yes. We've not. At this stage, I'm entirely focused on discovery, so I've not gone into marketing, signing any offtake agreements, etc., and so forth. But if you're building if you're Tesla building your car and it's got X many semiconductors, you'd want to know that they're green manufactured rather than hydrocarbon manufactured. Increasingly, the drive is for organizations to be able to say what the carbon footprint of their product is. And yeah, I believe there would be a differentiator for green helium, especially for end users who are conscious of building green products, and feeding into that green economy is something which I'm really interested in. As a geologist, will you have on-site basic analytical and equipment to give you a rapid day of initial results? Yes, we've got a mini Rudy mass spectrometer, as well as a second mass spectrometer provided by Geolog, who are mud logging consultants, and they'll both be giving real-time results from the mud as we circulate it. I could do this for hours. You mentioned helium has potential to be a price setter. What's the risk that this market becomes quickly regulated or self-managed like OPEC? At the moment, it's not freely traded. So for you to regulate a commodity which is traded through user to user, from supplier to user contracts, private company to private company, is rather difficult. So I don't think there will be a step to regulate helium. What you might find is, in the event of a long-term shortage and scarcity of helium, regulators might step in to try to secure their supply for strategic usage, such as military and space development. However, if we come into production, I think the chances of there being a longer term scarcity is not going to occur, because if it looks like you'll be undersupplied, it's relatively little capital for us to build a new production line and for us to increase our production rate. So I think that regulation isn't really something which I'm concerned about at this moment. I'm sorry, there's several hundred questions here.
David, sorry, we're just coming up to the hour, and I know there are a number of questions, so we can come back and address these and post responses where appropriate to do so on the platform. But if there are any further ones just that you'd like to address, or alternatively just give a small wrap up for investors before we redirect them to give you some feedback.
What exactly is the composition of the gas sweeping out of the ground? Whether the gas we've got coming out of the ground, which we've measured at the surface, is 10.5% helium and 90% nitrogen. So it's a very pure binary gas, which feeds into our very simple processing, which we envisage. Of course, the actual result of what gas coming out of the ground will actually be depends on the drill bit. And really, that's so much of what we're talking about here. It's the next 6 months makes the project work. We're a 20p stock at the moment, and that's because there is risk still inside of our project. When we make a discovery and it's de-risked, we're able to start focusing on things like the engineering, the marketing, the how much we need to build our plant, how we're going to market it, how we differentiate ourselves as a green company. We'll be attracting institutional investments. We'll be a big company. I can't tell you what the share price is going to be, but certainly with this de-risking step, we'll be expecting to host a party.
On that note, David, I'd say thank you very much indeed for updating investors today. Could I please ask investors not to close the session, as you will automatically be redirected to provide your feedback. If you do, please take a few moments to give your feedback. Will be greatly appreciated by David and the company. On behalf of David and the management team of Helium One Global Limited, I'd like to thank you very much for attending today's presentation. That concludes today's session. Thank you and good afternoon.
Thank you, everybody.